Hi, everybody. This is Miguel Vazquez again. Welcoming everybody to another video on information for reverse mortgages. Thank you, first of all, for seeing this video. I appreciate it. A little bit about myself. I've been doing reverse mortgages for like 15 years now. So I have a wealth of information. If you have any questions, please feel free to reach out to me, 562-881-9811. If you have any questions, just let me know. We're going to be covering just a broad view of what reverse mortgages are, from requirements, property type, et cetera, et cetera. Okay? Anyhow, so what are the basic requirements for a reverse mortgage? First of all, you have to be 62 years of age, or 61 and a half, or 61. And by the time we close the reverse mortgage, you at least have to be 62. So we can start it at 61, but you need to be 62 years of age by the time we close it. You need to occupy the property, you need to reside in it. It can be a rental, it can be a property that you don't live in. It needs to be an actual property that you do occupy. It can be either a single family residence, it can be 2 units, it can be 3 units, it can be 4 units or fourplex, it can be a condominium. And in certain cases, they'll do a reverse mortgage on manufactured homes. Another requirement of the reverse mortgage is that you have to do an educational HUD-approved counseling session, which can be done in person at the counseling office or through the phone. The session maybe lasts somewhere between 45 to an hour and 15 minutes, depending on if you have any questions or not. After you're done, they'll go ahead and mail you or give you your counseling certification of completion, which is required to start and to finalize your reverse mortgage. Once you're in the reverse mortgage, you don't have to make any payments on there anymore. But what you are required to pay are your property taxes and also your fire insurance. And if you have a condominium, your HOA dues on a monthly basis. And again, it can be all those things: single family, duplex, quadruplex, triplex, but it has to be owner occupied. Okay, you can have the other units rented, but you at least need to be occupying one of them. But the good thing is that there's flexibility there. What does the lender expect from you? The lender, once you're inside the reverse mortgage, expects you to make your taxes, your annual tax payments. They also, again, need you to pay the fire insurance and HOA fees, and they also require you to maintain the property. Okay, they don't want to just dilapidate it. They want you to keep it up. That doesn't mean you have to change the windows or change the flooring or remodel the kitchen. No, it just needs to be like maintained at its most basic form, and don't let it fall apart. And of course, they expect you to also continue occupying the property. Okay, a little bit of why were reverse mortgages created in the first place? So the reason why reverse mortgages were created in the first place is because before there were reverse mortgages, by the way, this program was created a long time ago, maybe like 40 years ago, back when Ronald Reagan was president. So let me compare the reverse mortgage to a regular loan, and then will tie it into why a reverse mortgage was created. So when you want to borrow money from a regular loan, from a regular lender that's not a reverse mortgage, they require you, or one of the requirements among many, is to have or show the ability to pay back the money that you're borrowing. So one of the abilities for you to demonstrate that you can pay back that money that you're borrowing is that you have a job and you're making income. That income is probably one of the biggest factors for you to qualify for a regular loan, any loan in general, but for a mortgage especially, you need to have the ability to pay. And you demonstrating and having a job and getting that income on a weekly or biweekly or monthly basis was a determining factor whether or not the lender would lend you that money to lend you the money. Now, once you're 62 or retired and you're no longer making as much money as you were when you were working, maybe now you're retired, maybe now you're not working as many hours, maybe now you're only relying on Social Security, which that amount might be a lot less than what you were making when you were working 40 hours a week. It's more difficult to demonstrate to the lender that you're able to repay that money that you want to borrow from them. So before there was reverse mortgages, there were many people who were retired, who had tons of equity in their property, but didn't have the same income anymore because they were retired, right? So they would go to the bank and they would say, hey, I want to borrow some money. I have tons of equity in my house. The bank says, oh, that's great. You have tons of equity, but you don't show a lot of income because you're retired now. And so they wouldn't approve them for the loan and they wouldn't be able to borrow the money. So because of that problem, the government stepped in along with a couple lenders, and they came up with this program called reverse mortgage, where they said, okay, this individual retired, they don't have the same amount of income as they did when they were working. Now they're relying on a lesser amount of income through Social Security or their pension, but it's not as much as they were getting when they had a job and they weren't retired, or they weren't retired, but they have tons of equity in their house. Okay, they're like, why don't we use the income or the equity inside their house to demonstrate their ability to pay back the money that they want to borrow. So the equity inside the retired person's house served as the security for paying back that loan, and that's how they came about with, and the reverse mortgage was created. So that's a little bit about the reverse mortgages and why they were created, because they couldn't get normal loans. So they came up with a loan called reverse mortgage, where it demonstrated their ability to pay back that loan through the equity that they have in their house. I'm just reading over my notes, making sure I'm not forgetting anything. Why would somebody consider reverse mortgage? There are many reasons why somebody would consider getting a reverse mortgage. Some of the reasons, or one of the biggest ones, is needing cash out to pay medical bills, needing cash out for home improvements, getting a cash out from a reverse mortgage to pay the grandchildren's or their kids' tuition, or they just need the cash out because they want to supplement their retirement income. Another reason is like they want to get cash out just to enjoy life a little bit more, and we're all going to pass away, unfortunately, someday. So it's nice to kind of like enjoy life a little bit. Another reason, or another big reason why uh, homeowners get a reverse mortgage out and get cash out is just to live like less stressful, to feel a little bit more secure, to feel a little bit more comfortable. You don't want to live your last days or last couple of years of your life very stressed out. Stress can kill you. So those are a couple of reasons why somebody would consider getting a reverse mortgage. Now, big question, does the reverse mortgage lender own my house, is what I get a lot. And the answer to that is no. The reverse mortgage lender does not own your house. Even though you participate in the reverse mortgage program, you still own the house. It's your house. All they have is a lien on the title, but that's like any other mortgage that lends you money on the mortgage. They have a lien on the title, but it doesn't mean they're the owners of the house. You are still the owner. If you, after being in the reverse mortgage, if a month later or a couple years later or 10 years later, if you decide you want to sell the house, it's your house and you can decide to sell it if you want. You can also refinance out of the reverse mortgage if you like. So the bottom line is like, no, the reverse mortgage doesn't own your house even though you're in a reverse mortgage. You own your house. A couple misconceptions that I wanted to clear up. No, reverse mortgage programs do not want to keep your house. That's not their business. Their business is to make interest on the money they let you borrow. They're not in the business of, oh, let's keep his house or her house. Let's trick them into a reverse mortgage so we can keep their house. No, that's not true. Another misconception is that reverse mortgages are free. And no, they're not free. That's not true. Reverse mortgages programs are not free. They're loans like any other type of mortgage loan. Okay, the reverse mortgage, just like any other loan, is charging interest on the money they are letting you borrow. And same thing, does the reverse mortgage need to get paid? The money that they let you borrow, does it need to get paid back? Yes, it needs to get paid back. What's the credit that you might need to get a reverse mortgage? That's a flexible aspect of the reverse mortgages. If you have a BK, you can still get a reverse mortgage. If you had a BK in the past, you can still get a reverse mortgage. If you are currently in foreclosure, or the process of being foreclosed, you can still get a reverse mortgage. Now it gets a little bit more complicated, but it is still possible. I've done them in the past for many clients. So you don't need perfect credit. Even bad credit is okay. You can still get a reverse mortgage. Some other things that are probably more critical to qualifying for a reverse mortgage is the amount of equity you have in your house, the value of your house, and also your age. Remember, you have to be at least 62. But the older you are, unfortunately, you're probably going to pass away sooner than if you're 62 versus maybe someone who's 92. That person's probably going to pass away sooner than the younger 62 person. So there might be more flexibility there to do the reverse mortgage and at least get more cash out than the younger person. How much equity do you need to have in your house to qualify for a reverse mortgage? The answer to that is approximately you need like 50% of equity inside your house. Especially if you're like closer to 62 years of age, yeah, you definitely at least want to have 50% of equity. 50% of your house needs to be free and clear, and you probably shouldn't be owing more than 50% of the value of your home to qualify for a reverse mortgage. If you own more than 50% of the value of your home and you're closer to 62, it's probably going to be tough to do a reverse mortgage. But it's always worth a shot of letting an expert like myself run the numbers, see the value, and see if you qualify. Don't just kind of like say you don't qualify because you heard this video. Okay, run it through us. We'll go ahead and help you out. How much money can you receive if you do a reverse mortgage? The answer to that is, again, maybe like 40% if your house is free and clear, maybe 60% if your house is free and clear. A lot of it is going to depend on how much do you owe on your current mortgage, and also how old are you. Again, if you're someone who's like 90 years old or 92, unfortunately, you're going to probably pass away than someone that's 62. So they're going to be able to lend you more money if you're older. How can you get your money? You can get your money one of three ways. You can get them all at closing, lump sum. Give me 50,000, 20,000, 100,000, 200,000 up front at closing. That's one way, a lump sum. The second way is getting it on a monthly basis, like monthly stipends. Every month you'll get $1,000, $1,000, $1,000, $1,000, $1,000. And then, so on a monthly basis is also another way to get your money. The third way is a combination of the both. Either you get a little bit up front once we close your loan, and then you get a little bit on a monthly basis. Again, the amount of money that's available for you is based on your age and also the equity inside your property. Another question that I get often is, does my spouse have to be 62 years of age for me to get a reverse mortgage? In other words, if one of the spouses is 62 and the other one is not 62, say they're 55, yeah, they both can still get a reverse mortgage, okay? So I just wanted to make that clear. If you're 62 and your spouse is not 62 years of age yet, you can still get a reverse mortgage, okay? How is the reverse mortgage money that you borrowed paid back? The reverse mortgage money that you borrowed is paid back one of two ways. When you pass away and you leave your house to your relatives or your heirs, they're gonna do one of two things. They're either gonna put the house on the market for sale, sell it, get the proceeds, and then pay the reverse mortgage balance off, and then keep the rest of it. Okay, so that's one way of repaying the reverse mortgage balance is have your relatives, when you pass away, just to sell the property, and then they can pay off the reverse mortgage balance. A second way that the reverse mortgage balance is paid off is by your heirs or whoever you leave the house to when you pass away, is they can refinance into a regular loan and then get the money from that refinance. They can pay off the reverse mortgage, and then they can just either rent out the house or the property and make the mortgages payments towards that new refinance loan. So that's a second way. The third way is to just let the reverse mortgage have the property. That's probably not the most practical way, but it happens here and there. One thing about that I did want to mention is that the reverse mortgage is a non-recourse loan. In other words, when you pass away or are no longer living in the property for 12 months, 12 consecutive months, the reverse mortgage money needs to get paid back. But at no time can the mortgage balance of the reverse mortgage, it doesn't have to be paid if the value of the house is less than what's owed. So if you owe, let's say you owe 750,000 on the reverse mortgage balance, and somehow your house is only worth 500,000, then your heirs only have to pay back the 500,000. In that case, they would say like, hey, reverse mortgage, go ahead and keep the house, and we'll call it even Stevens, and nobody has to pay the difference, okay? Because it's an FHA insured loan. You paid for that FHA insurance. That FHA insurance covers that loss, covers that difference, so that your relatives or whoever you leave the property to does not have to pay that difference. So again, your heirs will never have to pay back more than what your property is worth. Also, if they want to keep it, if you owe 750,000 when you pass away, and that's the amount that needs to be paid to the reverse mortgage, and the property is only worth 500,000, your relatives or whoever you left that property to can tell the reverse mortgage, hey, I want to buy this property from you, reverse mortgage, but it's only worth 500,000, and so I want to buy it off you. The reverse mortgage can only sell it to your relatives for 500,000. They can only sell it to them for what it's worth. They can't sell it to them for the 750,000 that are owed. That's what the FHA insurance is going to cover, okay? So they can actually buy the house, even though there's a higher balance due, for the value of the current market day value of the property. Okay. What paperwork is required to start a reverse mortgage? The paperwork that's required to start a reverse mortgage is you'll need your ID, your social security, a mortgage statement, if it's applicable, if you still have a mortgage balance on your property, hazard insurance declaration page, completing a basic reverse mortgage application, which I can help you with, or any other reverse mortgage specialist can help you out with. If the property is currently in the trust, we'll need a copy of the trust. If by any chance you had a previous recent BK within the last 2 or 3 years, we'll need the BK discharge paperwork. And then how long does it take for the reverse mortgage to complete? It takes about 6 weeks from start to end. Also, you're gonna have to do a reverse mortgage counseling course. I think I went over that, but just in case I didn't. Another question, can you get a reverse mortgage if you currently have an existing loan on your property? The answer is yes. You can still get a reverse mortgage even though you owe or have an existing mortgage on your property right now. The answer is yes, you can get a reverse mortgage. The reverse mortgage is going to pay that mortgage off, and then you'll be inside the reverse mortgage program. In terms of credit, you don't need perfect credit. Mainly the things that are important are, you know, the equity in your house and how old are you. Credit is important, but it's not a critical part. We've done reverse mortgages for, like I said, clients who have been on BK, people who don't have the best credit, who actually have poor credit. We have done reverse mortgages for them. The income, and you don't need to be making tons of money from pensions or from Social Security or have a job to have tons of income to qualify for a reverse mortgage. In terms of income, mostly what we're looking for is the ability for you to continue paying your taxes, your property taxes, and your fire insurance, and your HOA, and any bills that you have on your credit report. That's what we're actually looking in terms of income. And again, I can look at all that and figure it out and tell you ways how we can solve any issue that needs to be solved. Now, in terms of closing costs, what are the reverse mortgage closing costs? Probably at the least, I'm just going to give you guys a ballpark figure, somewhere between as low as $5,000 if your house is on the very low value end of the spectrum, or as much as $23,000 if your house is on the medium higher end of the value spectrum. Okay, so $5,000 to $23,000 is what the reverse mortgage cost consists of. Okay, and I've done other videos where I go over all the costs. If you have any questions over that, I can explain it to you over the phone. Send me an email. I can reply back with that reply if you want more breakdown of all the detailed costs of that. Or check out the video. It's somewhere inside my YouTube channel. Again, this costs somewhere between $5,000 to $23,000. It doesn't have to come out of pocket. It can just be placed on the balance of your reverse mortgage loan. Okay, so it doesn't have to come out of pocket. It can just be used from the equity, and it'll be placed on top of your reverse mortgage balance. Does a reverse mortgage have any prepayment penalties? Can you just pay back the reverse mortgage? Say you win the lottery and you just want to pay back. Yes, you can do it. There's no prepayment penalty. You can refinance into a regular loan, not have a prepayment penalty for paying back the reverse mortgage money that is borrowed. So no prepayment penalty. Reverse mortgages, again, is a type of loan. And like any type of loan, they have interest rates. Reverse mortgage loans have fixed interest rates where the interest rate does not change. And they also have adjustable interest rates where they can adjust up and down. Will the proceeds from my Social Security or Medicare be affected by participating in the reverse mortgage? And the question is no. Your Social Security and Medicare does not impact, the reverse mortgage does not impact your Social Security or your Medicare. Okay, so reverse mortgages does not have any effect on your Social Security or your Medicare. Now, it does have an effect on your Medicaid and supplemental income. On those two other programs, it will affect it. So it's very important that you speak to me, you speak to your tax person to see how it's going to impact that if you are on Medicaid or supplemental income. Okay. Anyhow, I know we covered a lot. Thank you so much for hearing me out. Once again, my name is Miguel Vazquez. If you have any questions, you can feel free to call me 562-881-9811. Once again, 562-881-9811. You can also email me, Miguel@homecentralfinancial.com. Once again, Miguel@homecentralfinancial.com. You can text me if you like. You can also look up my website, www.reversemortgageplus.net, www.reversemortgageplus.net. Okay, reversemortgageplus.net. If you would like more information, let me know. Send me an email, a text, call me. I love talking about this. If you would like also an appointment, we can schedule one. You can come to the office. For my reverse mortgage clients, I also do home visits. So if you prefer me going to your house and you being at the comfort of your home with your spouse or children or anybody else that wants to learn about this program, I can go to your house and explain it to everybody and answer any questions that they might have. Okay. Anyhow, once again, I hope everybody learned a little bit. If you have any questions, let me know. Thank you so much and have a great day. Bye.